Sue, this year has been torrid for the real estate sector. You've just published your 2024 outlook, and maybe it's fair to say that all eyes are on when, not if, the ECB will start cutting rates. How will rates pivot impact the real estate players?
So yeah, rates pivot will definitely impact the REIT players. There are two main influences. One is on the property values, and the second is actually on the companies that have got high leverage. And typically most REITs use quite a bit of leverage in order to fund their assets. So the cost of maintaining and sustaining that leverage obviously affects their profits. So if we go back to the first point on values, property values are driven by the yields and by the rent. And the yields, in turn, are driven by usually the 5-year swaps. So we've seen the 5-year swaps come back quite a lot for Euroland, but nevertheless, they're up about 240 basis points since they started their rise, whereas property yields in Europe haven't risen anywhere near as much. So the result of that is the spread, which we call the risk premium, is now down to levels that we haven't seen since the global financial crisis. So as those rates start coming down, there is a possibility that what will happen is that the spread will widen, the property yields will stay where they are, and the reaction will be quite subdued. Obviously, there'll be outliers to that in situations where the yields are much higher at the moment, like regional malls. On the second part, leverage has been very important. So the REITs have been selling assets in order to sort of shore up their balance sheet. That's brought down their rent. So while we're seeing quite a strong operating environment at the moment, the estimates for revenue and for profits, especially if you then price in as well the extra cost of debt, isn't going up very much. So yes, it's important for them for all those reasons, but how it actually affects them next year might end up being subdued, even though normally interest rates coming down would be a good thing.
And why has investment been so conspicuous by its absence? And when do you think that might return?
Yeah, there's a possibility the market may start loosening up next year. So what's been difficult is that pricing assets, because the interest rates have been all over the place, has been very difficult. And on top of that, there's been very few transactions to support that. And it's really only been companies that have equity with which to buy an asset with no debt that have been buying. So I think if interest rates stabilize, we might start seeing players coming back into the market to buy property. That will enable companies then to price what the returns might be from any investment. And, once they can understand that, then they can work out at what point it would be profitable and find a price for their construction or the sort of investment that it's going to be, whether it's renovation, development, or actually just buying standing assets.
And then final question, Sue, for our listeners, what are some of the key milestones that they should really be paying attention to if they're interested in real estate next year?
Yeah, macro is still very big. So where the interest rates are going, particularly the 5-year interest rates are going, everyone will have a keen eye on. But it also, if they start coming down, the reason of why they're coming down is important. So if they're coming down because we've suddenly got recession through Europe, then that's not so good for the operating side of the for the companies. So as I said earlier, the operating side has been reasonably strong on a like-for-like basis. It's just that the asset sales have reduced the amount of income that they get. So obviously, if the environment is negative from a growth perspective, that will negatively impact them as well. So you've just got to see the balance between the two factors. If they're coming down because we've dealt with inflation and growth is still there, which is the soft landing that we're all hoping for, then it will be reasonably positive for them.
Fantastic, Sue. Thanks very much. And as we said at the beginning, all eyes on the ECB. Thank you.